Yo, what's going on, guys? Bexio back, and today we got more Bitcoin news. Something big going on with Congress pushing forward this spot Bitcoin ETF. It is kind of crazy to see how this is unraveling so quickly. Before we hop into that, you know what we got to do. Smash the subscribe button on the road to 1,000 subscribers. So that one's a little quick one. But back into Bitcoin. A lot of talk around this spot Bitcoin ETF, something that was projected to be approved or on the market in 2022. That's when either the earliest timelines had it somewhere between 2022 or probably closer to the next halving for whatever reason. But there's a lot between now and just 2022 that's already happening with Congress talking about it and bringing it up to the SEC themselves. You can see right here from the Bitcoin magazine, two U.S. congressmen sent SEC letter advocating for spot Bitcoin ETF. These are the two congressmen. I'm assuming. I don't know why they would put two random people there, but see, they say we question why, if you're comfortably allowing trading in an ETF based on derivative contracts, you're not equally or more comfortable allowing trading in the comments in ETFs based on spot Bitcoin. This is a massive deal for when the spot Bitcoin was announced and everyone, all like big Bitcoiners or people in finance were saying there's no reason to buy this ETF. If you're a retail everyday kind of person who's just trying to put some money in Bitcoin or get Bitcoin exposure, there's no reason at all to buy this ETF because it's more for the institutions and for them to try and arbitrage things on continuation and backwardation. If you don't know what any of those words mean, you definitely shouldn't be in a futures-based ETF. But the SEC usually hides under the guideline of protecting investors and trying to have their best interest in mind. But to me, that never had anything to do with this ETF, with the futures-based ETF on derivatives, which are already insanely volatile. And you want to put derivatives on top of a volatile asset instead of just doing a spot-based one and just having Bitcoin itself. It has never made any sense at all. And, understanding just buying Bitcoin is a lot easier than understanding Bitcoin and the futures derivatives, how CME works, what backwardation and contango is, how this arbitrage works between hedge funds. It's just so much more crazy. That cannot be anything protecting the normal everyday investor. If that's what they're trying to hide behind, there's no way it can actually be doing that. But these congressmen go on to make a comparison to gold and spot futures ETFs market, saying right here, the spot-based gold ETF trust has traded over 55 billion in the last 50 years, compared to only 50.4 million dollars for the futures gold ETFs fund. So obviously, spot-based funds are much easier to understand. A lot more people are willing and wanting that exposure than a futures-based one where the vast majority, unless you are deep in the financial world, you don't even have a care in the world to what futures are, derivatives, CME, funding rates, all of these things that go into what makes this futures market a thing. Nobody cares about that. People just want to buy the asset. And when this ETF, this proves it right here that the gold trust traded $55.5 billion in 15 years compared to only $50 million from the futures gold ETF. Less than 10%. 10% would be $5.5 billion, so 1% would be 5 million, 500 million. So it's even less than 1% of what the spot-based thing did. So this is still insanely bullish for Bitcoin. Obviously, the spot-based one would be a lot more need or want for that, and a lot more people flowing into it. We saw $1 billion on the first day of the BITO shares one, and I think it still has under $2 billion under management, where it had an explosion of interest, probably by institutions majority, but they ultimately are done. Like, they have their money in, they're doing whatever they want to be doing, getting their arbitrage, and not really a lot of more interest after that, because it's been online for however many weeks now, and it hasn't even gotten $2 billion under management when it did $1 billion in one day. This goes on to say, it is our understanding that previously SEC chose not to approve a Bitcoin futures ETF or spot ETF due to concerns about the perceived potential for fraud and manipulation of Bitcoin markets. That's always going to be people in in power in the SEC and everything are always going to talk about that. That makes the point saying that they make the case that the pricing index or index that the Bitcoin futures ETF tracks, the CME CF Bitcoin reference rate, gets 90.47%, so almost 90.5% of their price data from the following exchanges: Coinbase, Kraken, and Bitstamp, highlighting that the concerns of any fraud or manipulation in the market would also carry into Bitcoin futures ETFs, not just spot Bitcoin. So basically, kind of calling them out, saying that they're hiding behind this concern that there's manipulation or fraud in Bitcoin when it's the most transparent thing in the world. It's a blockchain. You can look exactly at what's going on. But hiding behind this veil while releasing a futures-based one, which helps the institutions, the billion-dollar hedge funds, all of those guys. They get the most out of this, not the retail guy, not the everyday person who's just trying to invest some money. They don't get what they want out of this ETF. The institutions do. Let's be real here. But they end this article off talking about permitting futures-based ETFs will simultaneously continue to deny spot-based ETFs would further perpetuate these discounts and clearly go against the SEC's core mission of protecting investors. Obviously, that is perfectly said. I would have not said it any other way. They really are just seem like they're saying one thing and doing the exact opposite, saying they're trying to protect investors while exposing them to something that they don't even understand at all. Now, you don't even have to understand just Bitcoin now, which you don't even have to just buy spot Bitcoin and just ride the wave, but to understand futures and how they work in correlation to the price and how they move and all this stuff. It gets so crazy, and it's really dumb that they hiding behind this, saying they're going to protect the everyday investor when they're not doing that. But might as well end this video off talking about some things going on in Bitcoin. Right here we can see only 8 days since June 30th had exchange net positive change. So this is talking about the moving of Bitcoin off of exchanges. So red is obviously Bitcoin coming off exchanges, green is going into exchanges, and you can see, I mean, Bitcoin is leaving exchanges at ridiculous rates. There's days where it's 100,000 Bitcoin leaving exchanges a day. So it is bullish things. I mean, this shows people getting involved in Bitcoin, maybe institutions getting involved in Bitcoin, pulling it off the exchange, putting it into cold storage. That's probably where it's going. If we look at even this reply here is pretty good, showing the balance on exchanges. This is just total Bitcoin on exchanges by all exchanges. So orange line is that, the gray line is the price of Bitcoin. You can see we kind of reached the top like inflection point around January 2020, a little bit after that even. And then it's just been a heavy downtrend since then. Obviously, bull market, that's going to, like, say we're in a bull market, that's an obvious sign. But we're at levels not seen since about August 2018, which was during an entrance to the bear market. But instead of the trend going up towards that number, it's going down towards that number. That's a big difference. So coins are leaving exchanges. They're going to cold storage. And, this is just a good sign of people being bullish on Bitcoin and wanting to keep it for themselves. And then, we got to look at the hash rate very quickly. Say nothing much changes. The hash rate doesn't move that much every single day or whatever, but still the uptrend, obviously, getting a little choppy up here, which could describe a little bit of what the price is doing right now, getting a little choppy. As we can see right now, under 61,000, or right around that 61K level. It's just been very up and down, but pretty stable around 60, 61K. The biggest problem are these longs. Almost 32,000 longs. Let's zoom this out to a week. But these longs have to have been going up still, which just shows we still have so much of this greed in the market, in the leverage market, and people or whales can attack that, push the price down, cause liquidation, the whole thing that we've talked about before. And until we get this under control, which I think funding rates are starting to get it under control, I'm not 100% sure on that. But I mean, we see the longs still trending up. It was like 30K, even under 30K to start the week on the 28th. And then it went over 32. It's right around 32 now. I think we have to clear these longs before moving forward. That's just what's got to happen. So I think we're going to be stuck in the 60, 61K, even 62K range, 60 to 62K, until this gets sorted out and the greed is finally taken out. We have had this for many weeks now, that it's getting annoying at this point, but it's still here. I mean, we might even dip down below 60K of trying to get these longs liquidated and trying to get whales trying to get just a few more Bitcoin. But it wouldn't surprise me at all to see that. So hopefully we see the longs get under control here. But guys, that's going to do it for this video. The SEC being put on notice by Congress right now, seeing if they can actually get this spot ETF approved. If they do get a spot ETF to go through, that's insanely bullish. That's going to be another like leg in the bull market. If the futures ETF did $1 billion on day one, the spot ETF could do at least 2 billion. Maybe it runs to 5 billion, and then it will continue to stack up. People would want that exposure in an ETF form, and I think the money would continue going forward. Whereas where we saw the futures one, we saw $1 billion day one into nothing really happening a couple weeks later. But got to remember the supply, 85% of Bitcoin's locked up. And right now, if that ETF was to launch, it would cause the price to go soaring. They'd be forced to be buying Bitcoin to back the ETF, a spot one. And there's not a lot of Bitcoin out there to be bought. So we got to keep that in mind. But as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.